So welcome to RANsquawk's e-morning briefing for Monday the 22nd of June 2009. Just gone through 8:30 now in London, and a quick check round the markets. A rather cautious start to this week's trade. At the moment, equities slightly lower, around 1% in the FTSE CAC and DAX, with fixed income, bond futures roughly flat now, having opened lower, and gilt futures already up around 36 or so, mainly with the gilt move on life in preparation for the 10 to 25 year sector buyback we'll see from the Bank of England. A reverse auction today targeting £3.5 billion worth, going from most analysts, just some pre-buying into that auction later this afternoon. Take a look then into the news with a cautious tone this week, or getting underway in Monday's trade. One of the main things was the World Bank. They've cut 2009 and 2010 growth forecasts for the US, Japan, Eurozone, Russia and Brazil. However, they have upped China and India. In terms of the US, they see a contraction of 3% from previous contraction of 2.4%. And for the Eurozone, they see 2009 GDP at minus 4.5%. So again, somewhat denting sentiment this morning. In terms of other headlines, starting off with the US, according to the FT, the US Federal Reserve is contemplating major changes to the repo market. Among the changes being considered are plans to create a utility to replace the Wall Street banks that handle transactions, according to people familiar with the matter. And elsewhere, staff of Goldman Sachs can look forward to bigger bonus payouts in the firm's 140-year history after a spectacular first half of the year, sparking concerns that big investment banks survived the credit crunch would derail the financial regulation reforms. Elsewhere from Europe, ECB's Trichet said no more stimulus, saying that no more need for government stimulus, and predicted the global economy will pick up in 2010. He also warned that governments which have borrowed billions to fight the economic crisis had no room for more debt, and it would have to start bringing down their budget deficits. We've also seen Novotny on the wires, and his main headline there was indicating that ECB rates he foresees staying on hold for the rest of this year, or no major changes to that in interest rate policy this year. That was from Novotny in Austria. Elsewhere, the dollar index that's trading up this morning around 0.5%. Worth noting, the chief economist at Goldman's, Jim O'Neill, he said that until we see another 5 years of evidence that China is being a more consumer-driven economy, getting bigger and bigger, and also whether the euro can have a successful second decade, then the dollar for the time being looks to remain the dominant currency. Elsewhere from the UK, worth noting a few things. Sunday Times writing that Darling will in the next few days set a blueprint for financial regulation in Britain, which at its heart is a beefed up tripartite system rather than a wholesale transfer of powers to the Bank of England, in which some will probably see as somewhat of going against the governor of the Bank of England, Mervyn King. And elsewhere, the Sunday Times closely followed economist and editor David Smith, writing that bank plots when to light the interest rate fuse. Smith, writing at King's Mansion House speech last week and other recent output from the bank, gives evidence that the ground is being prepared for a shift of policy. King saying next year there could be a sharper rise in interest rates than the city expects. And finally, looking at stocks, obviously as I said, we are marginally low at the moment, but one stock bucking the trend is Anglo-American in the FTSE 100. One of the biggest stocks news out there. They opened up over 12%. Reports over the weekend that Xstrata has approached Anglo-American about a £41 billion merger that would create one of the world's biggest natural resource companies. Anglo-American have confirmed the merger proposal, but was markedly unenthusiastic, emphasising the situation is at a very preliminary stage and there was no certainty if any transaction would be forthcoming. It's something we'll be keeping a very close eye on throughout today, and also its knock-on effects for the miners in the FTSE. So for the schedule then, we're around 15 minutes or so, we'll look out for the main Eurozone data, the German IFO report. We're looking at around 9 billion euros headline, expectation of futures slightly lower this morning. And just looking ahead on the calendar, 9:30 from the UK, we'll be eyeing the UK retail sales report, and then this afternoon eyes will be on jobs data. Continuing claims expected to remain pretty much steady. Initial jobless expected to remain pretty much steady, and expectation of 602,000. However, continuing claims are expected to continue to rise to 6.84 million today, and then the next attention will turn to the Philly Fed survey, where analysts are yet again expecting a slight improvement.